Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how going, Phil Tarrant? Welcome to our special series of the Fast 50 for 2025. Where to put your money today for the best capital growth in 2025. We're in the process of unpacking the report, looking at it from a whole bunch of different angles, and hopefully you tuned into yesterday's podcast where we formally announced the report and gave some insights into why we do it and how we scored against last year's report. And the commentary was, the feedback was, the consensus was, I guess, that we did pretty well. So I think we've established the bona fides of this report, how we put it together, and it is a curated aggregate view of where to put your money today for the best capital growth in the year ahead, leaning on some of the best experts in Australia in property investment. I enjoy this every single year. People are using this report to make more informed decision makings. And the feedback was, and go and listen to the podcast you haven't tuned into yet, when RP Data come out with their numbers around performance annually, 6 of the best performing suburbs, according to RP Data for capital growth, were in our top 10 of the Fast 50. So, and the rest of the Fast 50 all performed pretty well, left or right, a couple of them which didn't perform as well as what we thought. You can't always get it right, but I think the point was we got it pretty right. So this should be information that you rely on. Join him in the studio, our partner of the report for the second year running, Paul Glossop. He's the CEO of Pure Property Investment. Paul, we did it.
We did it, mate.
Just. No.
It's always a bit of a scrape together of all the last bits and pieces with these pretty detailed reports, particularly when you've got multiple people giving inputs and trying to figure out what it all means, and overlaying that with a pretty, a pretty well modelled spreadsheet, which kind of takes into account a whole bunch of different weightings and overlays, etc. So it's not necessarily just plucking names and numbers out of thin air and putting them into a report. It's certainly a lot of detailed methodology. So this isn't from the Pure Property Investment mystery black box of it actually is.
Joke suburbs. Maybe that's what we should do.
Many of them are. But I guess as we talked about in yesterday's episode is that 6 out of those 10 best performing out of 10,000 suburbs miraculously appeared in the best performing for 2023.
Who would have thought? 2024. Yeah, who would have thought? We're only now into 2024, so this is looking ahead.
Yep.
This report for 2025. And this is the Fast 50. Maybe what we should do, I can't remember the name of it. In some industries, they do, this is the best of awards, and they do, these are the worst of awards.
Yeah.
But the Rizzos or the Rosies or something or other.
Well, they're doing it with all SMSFs basically get rung over the coals every year now, don't they, where they name and shame the worst performing super funds out there.
Yeah.
I wonder if we could get your team to maybe scrape together some of the predictions at the start of every year, and you might lose a bit of sponsorship there. But you know what? You could grab it all the way out there. I mean, there's no shortage of people putting their name to suburbs every single year, and whether they're going through...
Yeah, I've got to come up with a good name with it. Look, mate, we're absolutely transparent. We're on the side of investors. We just want investors to make better decisions, you know.
The DPIs, the Dumb Property Investment Awards, the DPIAs.
The losers. Which suburbs you reckon are really bad? There's got to be somewhere where you just go, oh, why would you do it?
At that time, why would you do it then? And there is, I know of, and I mean, that's one of the good and bad things about looking through people's portfolios daily is that I tell you what, I do look at some purchases and then I scratch my head. Why would you do that?
And this is why people go, Phil, what do you do? Why do you do the Smart Property Investment Show? Why do you do reports like this? Why do you do the website smartpropertyinvestment.com? And I sit there and I go, number one, because I can. Number two, because I hate people making mistakes when it comes to property investment. And number three, property investment ain't that hard, right? But people often get their information, or they make decisions on information which is completely not the information they should be using, as in Uncle Jimbo sort of told me at a barbecue to go invest in some mining town, right? Like, I think, and whether or not it could be scientifically tested, that people today are probably making better decisions when it comes to investment property decision making than what they were 20 years ago. Because all that largely people had available to support decision making 20 years ago was seminars that they go to on a Saturday morning, and someone stitching you up for some course at the back of the room or some sort of off the plan. And I'm not beating anything up. There's a lot of good operators in that were then and still today, but that's really the only decision making the only information you get. or some very good books. And I think of Jan Summers' book.
Yep.
Now, people that read Jan Summers' book, which is probably 2 decades
More.
old now,
Yep.
probably did pretty well.
Yeah.
So there's winners and losers in every market.
Yep.
There still is winners and losers in every market. Why do we do this report? Why do we do the Smart Property Investment Show? Why do we do Smart Property Investment? It's because we want more winners than losers.
Yeah.
But it's only as good. Information, market intelligence, whatever you want to call it, is only as good as what you choose to do with it.
Yeah. But it's you touched on a couple of things there, which you and I have been investing in property personally for quite some time. And if we think back to when we started investing in property, which was relatively similar timeframes, I know full well that what I was relying on was still strongly was relied upon what other people told me. And really, they could have been telling me fact or fiction. I had to go and debunk a lot of it myself and try to get ground truth with what I knew, but also combine that with what minimal amount of resources were out there that could have been third party, unbiased. And I know when the Smart Property Investment website went live and you could do your own suburb checks way back in the day, you probably attest to this now, that it's still probably one of the more utilized components of your website, because people want to see data that has no bias or agenda. And 8-10 years ago, there was very little of it available. Now, there's no excuse. And, Smart Property Investment in particular has probably been one of the bastions of this, where to say, look, you can go there and you can get unbiased advice and essentially data to make your decisions every single day of the week. And that's what this report is here to do.
I'd probably even go a step further, is that's probably one of the very few places you can go.
Yeah.
Which is
that's not selling you something.
A curated aggregate view of what's going on. I sit there and I lead the real estate and financial services business at Momentum Media, and we take great satisfaction out of being able to provide information like this, which is well, it has an agenda, and that is to help people make better decisions, so there's more winners than losers. And I don't reckon there's anyone out there that will go, nah, that's a pretty bad objective.
Yeah.
And people who have had a relationship with Smart Property Investment for 15 years plus will know that's what we do. I come on the Smart Property Investment Show, I talk about my journey through property. I've done pretty well through property. Could have done a lot better. Could
have done a lot worse.
Could have done a lot worse. And I still today, I'm happy to share that journey through property.
And that journey's not anywhere near done.
It's only really just begun, to be honest with you.
Yeah.
And I enjoy talking about property. I enjoy connecting with professionals who operate in and around property. And I'm happy to report that the cadre of professionals in property today versus what it was when I started working in and around property or in and around the media is much better. Because there's so fewer places to hide today. So fewer places to hide. So we've had this sort of groundswell, this emergence, and I'd like to think Smart Property Investment has been a supporter of this, of what you do for a living, the property buyers, property strategists. 10 years on, there's a lot more buyers, agent, property strategists out there, and helping people, no doubt the same objective, trying to make more winners in property rather than losers in property. But guess what? For you, people got to pay money to access that. That's fair enough, right?
Yeah, absolutely.
You got to pay for good advice.
If you're not paying for it, the person who's passing you that advice is getting paid somewhere else, and that's when I'd start asking questions.
So you work on behalf of your clients, and no doubt there was talking about winners and losers. A lot of winners who you probably advised to go into some of those suburbs in the top 6 of the 10. What were some of those suburbs, top 6 of the 10?
Top 6 of the 10, I could give a couple rattling off my head. I know Armidale was one, Mandurah was another, south of Perth there. Where else have we got? I'm going through the
maybe
list.
We can do a bit of a report on it next time we get together and look at what those top performing ones was. But you know what? If you want to play the property game, everyone to bring back to Monopoly, like you want to have the best information to support decision making, and therein lies what we can chat about today. A lot of people are going to invest in property. I'm going to do something in property. You see it all the time. You must have them, call them tire kickers, if you will. It's a term of endearment. They go, I'm going to do something, and for whatever reason they don't do it. And there's always an excuse. There's people who are wired in different ways, and I've said it before. Imperfect action always trumps perfect inaction.
Absolutely.
But I preface that with, don't be an idiot, right? Just don't. Property is not like throwing caution to the wind. You've got to be deliberate. You've got to be strategic. You've got to be informed. You've got to be an educator. Hence the reason why we help people out with stuff like this.
Completely, mate. And I think for those who don't be a statistic is what you just referenced there. And I think one beauty about doing this for a very long period of time in the buyer's agency space and property strategy space, is coming on 10 years of being in this business now. We have a lot of people who we've spoken to over the years. And part of that, every time we speak to a client and every time we provide a strategy out of that conversation, we record that and we save that under their name and under their profile. Now, it happens, I would have to say, probably out of the dozens of meetings I have with clients, be it established, existing clients and new clients every single week, and my team do also with other people every single week, there'd be at least half a dozen of those people who we've spoken to 2, 3, 4 times prior and have done nothing. And not to say that they're kicking tires and wasting time, because they come back to us with a relatively similar agenda. If anything, they've probably got a little bit more savings and their income might have increased a bit, but they're still essentially shoulda, coulda, wouldas. Yeah. And they come back and say, oh, I knew I should have done it last year. Oh, I can think of a client who now lives in the US and they got a huge amount of cash reserves. They've finally got their finances ready, and we just bought 2 properties from them this week as we speak, and they came to us back 2 weeks prior and now live in Atlanta, Georgia, and essentially at the point now where they spoke to us 4 years ago, and we had a strategy set up to buy 2 properties in Brisbane at that time. They sort of thought about it, they circulated, and they just said too hard basket. It was just before COVID started, and they were like, oh, I don't know what's going on. We looked at it and said, guys, it's going to be good.
So what you're talking about there is missed opportunity.
Missed opportunity.
So taking action when you feel as though you've got sufficient information to take action, and
finances
and finance, everything else, and tire kickers, to be fair, is probably the wrong term. I think it's more of every investor is different, and their decision making process is going to be unique to them. You know, some people need a lot of information before they pull the trigger on a property purchase. Some people are just like, whatever you say, Paul, if you think it's a good idea, that's a good idea.
And I don't like that personally.
No. So you want people invested in the outcome.
Correct.
You want people invested in the journey. You want people invested in the process. You want people invested in the methodology. And the best investors I know are invested in that, even though they may use a professional like yourself or some of the other people who are involved in this report as buyer's agents. So you've got to be comfortable with your own mechanism for how you make decisions. I make decisions in a particular way. You know, I'm very much about, I'll speak to a whole bunch of different people, I'll get their frame of reference, and then I'll have a particular lens through it, and then I'll make a decision. That's what I do. I do it in business, I do it in property.
Yep. And once you've made your mind up, action.
I do it, action. But I'll hit it, right? Yep. So 90% of winning is beginning. Yep. We all know that. Some people don't begin, so therefore they never win. But to the point you made around missed opportunity cost, these people you spoke about, these clients, may have had more earning potential and may have had more savings, but they've missed potentially 3 years in the market. And I would guarantee the savings that they have accumulated, if what they had back then was deployed earlier, would have amplified significantly more. And there'd be a mathematical equation around that.
Absolutely. There's a real simple compounded number around that. And I think in that instance, it was about $220,000 they were looking to deploy across 2 separate deposits of circa $100 K each, or $500,000 in 2 separate properties, $1 million in assets 3.5 years ago. But they're both going to be in North Brisbane, both of those purchases, freestanding established houses at that time. Fast forward, the values of both those properties are sort of oscillating between that early to mid, even late 700s. So if you do it on the math, it's not that they missed out on $500,000, it's that their $200,000 could have more than doubled. Essentially, $200,000 turns into $500,000 in additional gains.
So the cash on cash returns, not counting on the basis that they realised it, they would have more than doubled their money.
Yeah, it would have been 150% cash on cash return. And then you're back to that. And you're like, well, what else have you done with? How long does it take you to save $100,000 a year in that example or more? It's probably $150,000 a year. For most, that is certainly not an annualised ability to do so. And what have they done in that time? They've gone from $220,000 in cash to $275,000, $280,000 in cash. They've saved an extra $60,000 by doing nothing. It's cost them net effect $440,000.
And that's the power of leverage. That's the power of timing.
Correct.
And so the point is, Fast 50 report, where to put your money today for the best capital growth in 2025. We're given all this information, and I think what we've established was, and by the way, there's no guarantees that we've got this right, but what we've established, the bona fides of the first report, if we're able to emulate that this year, the information that we're providing can be used to support better decision making, what to do, when to do it. And even it's about it's time to do it, right? And if this just helps as part of your decision making, give you that layer of confidence to finally take action, go about doing it. So how can investors interpret and analyze your report? Everyone's going to do it very differently, Paul. Everyone's going to do it very, very differently. But the point is, don't be a statistic. Take action when you're ready and appropriate time for you to take action. Be comfortable with your finances. Be comfortable with your family budget. Ensure that you got finance all sorted out. If you've got all that stuff, what's stopping you from investing in property? Speak to professionals. Find a coach. Find an advocate. Find a friend. Someone who can help support. Move outside of your own perception towards something and start thinking it from a perspective point of view. Get a different perspective on it. If you can't get it, there's people that can help you at it. Because if you're looking at through your perception, your perception is what's holding you back from doing stuff. Get a different perspective. It's a really, really important skill and tool for the best investors I know, is that they're able to take themselves out of their own paradigm, put themselves in different shoes and look through things via a different lens. And again, this report may help you do that. This may be the catalyst for you to go, it's finally time. This may be the catalyst of going, well, I've been looking at all these suburbs. I must be onto something if these guys are coming out doing it. So how do we come up with this? We spoke to 11 experts. We said, where should Australians invest in property for the best capital growth in 2025? They told us where they were. We went to our market intelligence business, our friends over at Agile Market Intelligence, and they've put this list together with an overlay of data. So it works pretty well. Now, missed opportunity costs. There's 2 sorts, 3 sorts, 4 sorts of missed opportunity costs, Paul. We spoke about not that the slowness of execution, not doing something when you could have done it and leaving it, and what the impact of that. Me and you took a very different approach to this report last year, and I was gonna invest in a property in my self-managed super fund when this report came out last year, and we both said, look, let's both do it. Let's put our money where our mouth is, right? Yep. You did. I think you bought 3 properties in a super fund in probably 3 of those 6 areas, which were in the top 10 of Australia and all part of the Fast 50 report. I didn't put any money in property. I did, but I put it in another property outside for something else. But I chose to put the money in my super fund into the share market. And I'm happy to report...
Compare the pair.
Compare the pair. I'm happy to report that my share portfolio sits inside of my super fund, where I deployed this money, has just got back to where it started at. and
it's had a bit of a run.
It's had a bit of a run. It's had a bit of a run in the last couple of months, and it's got me back.
Ran away from you, now it's running back.
So let's say I'm even Stevens, right? I'm happy because I'm back to evens, and it's only going to go up from here, Paul. Don't worry about it.
Fair enough.
They're good stocks. It's reporting season right now. Don't you dare talk down shares. Don't you dare talk down shares.
I'm not, and I'm certainly not going to have an opinion there.
But this is about where you deploy your dough, right? And I'm all for diversified. Like, again, there's no advice in this podcast. Paul can give advice. I can't. He's actually a qualified expert. I'm just a guy that talks around property. So I can't provide advice. But I think some of the best investors I know have diversified financial assets. So I have shares, commercial property, resi property, regional, metro. I have a share portfolio. I invest inside of a self-managed super fund, and I have other assets. I have an antique vehicle, as you know.
If the listeners only knew,
I can get plates.
You haven't got them though.
I can get it this year.
When you have them, I'll respect.
It's
the respect
30th
level of
birthday. 30th birthday is the 30th.
We might have to have a party. Maybe we should record one of these podcasts from the rear of that said vehicle.
Probably should do. Yeah, I'm going to get historic plates on it. It's probably the most original one of these vehicles in Australia. It's I've got the tape deck's working on it. It's going well. High fidelity, much like the Fast 50 report. The fidelity, it's accurate.
It is
it's
a
on
dog
money.
box for all listeners out there. I've seen this said vehicle. It is, you wouldn't sit in it.
I have a diversified portfolio. I tell you what, it's one of my favourite assets, though.
No doubt. It's definitely cost you the most.
I don't know, for those Only Fools and Horses fans out there, it's like Trigger's broom. It's still the original car, but it's had 4 new engines, 2 head gaskets. So anyway, for those people who like antique vehicles, you know what I'm talking about. It's passionate.
Yeah.
I'm not a car guy, by the way, but I deployed money into a different asset class.
Yep.
You deployed money into taking action on this report.
What I knew.
What you knew. How did you go?
Well, I guess to give a bit of context into the dollar value that we were talking about this time last year is that I was sort of considering putting circa 100, 120 odd K cash from a super fund that was set up and leveraging that at about 80% into an asset. That asset ended up being around about $440,000. Now, I tried to convince you to say, mate, have a crack. I think this is going to work out. That one asset, and there was three of them that I ended up buying within this report, but I'll stick to one that I talked to you about at the time. That did about 22% in the last 12 months. So, on my math, that worked out to be just shy of about $100,000 in capital growth. So from that 100-odd thousand that was invested, it's returned $100,000 essentially in capital growth. Now, yeah, sure, I haven't sold it, so it's essentially it's paper gain for now. But so is shares, so is anything until you actually crystallise your win or your loss. But essentially on paper, that's 100 in the black right now. So 100% cash on cash return in that 12-month time, and it's cash flow neutral. It's yielding about 6.6%. So, for me, that is the opportunity cost between you and I talking last year, Phil, and not to rub your nose in it, sucked in.
Okay, big boy. I can handle that. I do like the topsy-turvy world of share trading. Personally.
But you're the only one at this table who does enjoy that.
Yeah,
I like the ups. I definitely, and they come so infrequently.
Oh God,
that's the part. That's why they're so enjoyable, I think, personally, because like every now and then you'll look, you're like, hey.
Yeah, God. I'd see the press release coming through, 100% revenue growth, and you go, cool, this got to do something.
And then
it
dropped. I paid record dividend.
Yeah,
and it dropped.
Yeah. But you've got to invest in what you're comfortable with, right?
Yep.
But it's all about taking action. And this is the point with the fast food report. We've given you some information. What you choose to do about it and with it is completely up to you. My recommendation, again, it's not advice, my recommendation is do something. Do something about it. And if you don't know what to do, I'm going to help you where to start. Personally, I'll be chatting with the professionals you use as part of your decision making. Speak to your accountant. Hey, am I good to go?
Yeah.
Okay.
Speak to your broker.
Speak to a broker.
If you don't have a broker, speak to a broker who specialises in finance. Get those numbers ready. Are you good to go? What can you afford? What's your cash flow look like? How much money do you spend? How much money do you need on an annualised basis? And once you kind of know those numbers, then you don't even need to. I mean, I crunch those numbers when I sit down with clients pretty much as the first thing we do. So we try to get specific on their own numbers before we worry about what property we're going to buy, what's the value, what's the location. We try to unpack what your position actually look like. You may think you can afford X, but let's look at your expenses. Let's look at your essentially what else you have out there. How long do you have to invest? Do you have school fees coming up? A range of other things that we have to actually go through to then say, okay, look, here's where we should be heading. Here's the price point. Here's the property type. Here's the yield we need to achieve. Here's how we can get that from one property to two, from 2 to 4, to get us to the point where you may be seeing that's the horizon that we want to get to. How do we sell that down in the future? This is all part of that first conversation, and that's the doing. That's before an asset is even talked about.
Yeah. So if you can do all that, that's where you start talking about where to buy.
Yeah.
Speak to your buyer's agent, guys like Paul at Pure Property Investment, or your colleague Lena, who's one of the experts.
Aaron as well.
Aaron. Who do we have? Gerard.
Gerald.
We spoke to him the other week.
Gerard Touchard. He's absolutely literally just going through inspections in Brisbane as we speak for certain assets, and I'm working on 2 off markets for a couple of clients that he's just gone through
yesterday. Any
yesterday.
of the suburbs in the list?
One of which is actually in there, yes.
Really?
It is.
Tell us what it is. We've got to give him something.
Oh, see, I'm going to give this away, and then all of a sudden he's going to lose that property, and all of a sudden he can't get any more assets for our clients. Marumba Downs.
Okay.
Yeah.
Marumba Downs.
It's probably in the top 5-ish, I reckon, as far as we're anticipated. The last 3, 4, 5 years has been very good for that market.
Marumba Downs.
It will
lots
benefit.
of votes. Lots of votes from our experts. I'm going to give some people some info here.
Okay.
Marumba Downs probably sold 141.
It's a good volume market.
So we didn't include any suburbs that sold less than 50. We said sample size ain't big enough.
Yep.
Quarterly growth is 8.3%. Pretty good.
Very good.
Yes. Hang on a sec. Let me just expand my thing here. Average annual growth, Paul?
6.7%.
Okay. Average annual growth, 6.7. 12-month growth. What has it done in the last 12 months?
Bit over 6%, which is essentially that's when you look at quarterly growth is 8%. 12-month growth is 6%. Tells me.
Yeah, that's strange, isn't it?
Well, it tells me it's probably starting a little bit of a rally as we speak.
So that 8.3 has contributed probably a lot to that 6.6. So it's probably been going backwards until it potentially.
Well, to be honest with you, that market had a very good run, and then the start of the interest rate rise saw that market retrace quickly, and now it's rebounding again. But it's probably started this run 2020, 2021. But it's in a perfect position for probably what's going to come in that general vicinity in the north area of Brisbane through the Moreton Bay region over the next decade. So leading up to the Olympics, it's in a prime location, 10, 15 minutes from the city. It all becomes clear. On the train line near university, it's a range of different things. A good owner-occupied gentrifying type of market. Not cheap, not crazy yields, but a good, strong middle ring market that will get better over the decade.
Well, you can look at the rent, right? So 3% rental, 3.8% rental yield, median rent 580, and your median price is just shy of 800. So you know the sort of suburb, right? You know the sort of suburb. So there you go. Well, that hot tip live.
Yeah,
there you go. So
don't buy there until at least a week and a half after this, listening to this, because we've got to finish a few off-market deals. Which
you've got a couple of days. You got a couple of days, mate. I reckon. So we're giving you something. People are sitting there going, "Just tell us what the Fast 50 is, would you?" I'm sorry, I've got to be that guy.
Tell us the price.
You've got to go and download it. smartpropertyinvestment.com.au. Is where you will find it. Download it now. We have another 4 podcasts as we sort of unpack it. We've got to start just releasing some of the information over the coming days. But guess what? You can get it all right now. smartpropertyinvestment.com.au. Go and check it out. We'll keep chatting, Paul. We'll get together again tomorrow. I want to get a bit of a sense before we start talking about sort of metro and rego markets, some of those suburbs that didn't make the list, and tactically, what the next steps are for everyone. I really want to get a sense for this is a report around capital growth, where to put your money today for the best capital growth in 2025. But you can't do that in isolation. You always got to have an eye towards the bottom line. So we'll get into that next time we get together. But in the interim, you're happy? Those people sort of sitting there going, I want to take action. I want to do something about it.
Yep.
They've got finance sorted out. They've got an accountant reckons you're good to go.
Even if they don't have that, they can have a chat with us, because we can definitely speak about some of those things and put people in touch with the correct people if need be. But purepropertyinvestment.com, they can lock in a time to speak to me pretty much immediately, or they can give our office a call, 1300 98 5428, and they can essentially get in touch with our team to then lock in a time to speak, typically within 24 hours, and start this journey. Because as you said, mate, and you've said it a few times, and I'm probably going to doctor it in some way, shape or form, but you say it, something about winning is beginning. I don't want to steal it away from you, which I think you nicked from Tom Panos as well. 90% of winning is beginning.
Mate, I steal everything from Tom Panos.
Shout out to Tom Panos.
Sure, Tommy Panos, steal everything. No, what did I say?
90% of winning is beginning. Imperfect action is better than perfect inaction. There you go.
Which is just like pretty much saying, just get on with it.
Get on with it.
Just get on with it.
Yeah.
If you've got enough info to work it out, just do it.
Yep.
Just do it. There you
do
go.
something.
Okay, trademark pending. All right. Thanks for joining us. Go and download the report, smartpropertyinvestment.com.au. Keep the commentary coming back. It's coming. I like it. It's good. I get it. Talk more about the suburbs. We'll do it. Stay with us. We'll see you next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.